Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 trending strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that not only have been trending with analysts, meaning they've been picking up a lot of new ratings lately, but they also have received unanimous buy ratings within the last 30 days. So today we're going to take a look at these companies, what it is that they do, and what Wall Street analysts are predicting for the stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, then help me out and make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 trending strong buy stocks. First on the list today, we're taking a look at GE Aerospace. Their stock trades under the ticker GE, currently priced just shy of $157 per share. In the past 1 year, the stock has grown 100% and has climbed an impressive 52% in the last 3 months. GE Aerospace inherited the GE ticker after their parent company General Electric broke into several different entities. General Electric was a well-known corporate name in America and a multinational conglomerate. They split into 3 separate entities officially earlier this month, focused on healthcare, energy, and aerospace. GE Aerospace's primary business is the development and production of high-end engines, including jets and turboprops, to meet the needs of both the commercial and military aviation sectors, as well as turbine engines for industrial and maritime purposes. GE's Q1 earnings report will be coming up next week on April 23rd. This follows their 4th quarter back in January, where they came out with a solid earnings beat. Of course, this was pre-split. For their Q4, they reported revenue of $19.41 billion, easily beating estimates, and earnings per share of 82 cents, coming in 9 cents ahead of expectations. The company saw their total orders of $21.7 billion grow 8% year over year. Looking specifically at the aerospace industry, they delivered higher orders, revenue, and operating profit in the quarter, and for the year delivered double-digit growth in orders, revenue, operating profit, and cash due to commercial momentum and strength. Within the last 30 days, the GE stock has received 12 buy ratings from analysts, one of those coming from Goldman Sachs. They noted that they expect GE Aerospace will continue to benefit from strong commercial aerospace end market demand. They expect both narrow-body and wide-body production rates to ramp through the end of this decade, supported by near-record level backlogs at both Boeing and Airbus. GE Aerospace has 16 current analyst ratings in total, coming in as a strong buy with 14 buy ratings and 2 holds. The average price target comes in just shy of $170 per share, which would be an upside potential of 8.3% from current prices. Looking at our most recent ratings here, in the last 30 days, we do have a high-end price target of $190 for an upside of over 20%. And if we scroll back further, our holds here are back from the start of March, and our low-end price targets are a couple of buys back in January that the stock has already surpassed. Our second stock that is trending with buy ratings lately is Academy Sports and Outdoors. Their stock trades under the ticker ASO and is currently priced at $57.61. Now, they have had some ups and downs this past year and overall are down 14% in a 1-year time period. In 6 months, they did climb 24%, but have been cooling off more recently, falling 8% in the last 3 months. Academy Sports operates a chain of sporting goods stores. In fact, they're one of the nation's largest sporting goods and outdoor stores. With 284 stores and counting, they offer a broad assortment of quality hunting, fishing, camping equipment, and gear, along with sports and leisure products, footwear, apparel, and much more. They also announced that they're targeting 15 to 17 new store openings throughout 2024, starting with 2 new stores in North Carolina and Indiana. Now, that recent decline in stock price follows their Q4 earnings report that came out last month on March 21st, where the company did fall short on earnings. While revenue did increase a couple percent year over year to $1.79 billion, it did fall about $10 million short of analyst expectations, and earnings per share of $2.21 fell 8 cents short of estimates. The company noted that they were proud of the progress they made and the resiliency that the team has shown as they've navigated through many challenges over the past year. They've been working through a choppy macroeconomic backdrop while putting in place the building blocks for their future. And as you know, the stock has received all buy ratings in the last 30 days, so it seems analysts are also optimistic about them overcoming these challenges for 2024. One analyst from Jefferies just initiated coverage on the stock, saying that the market is underappreciating the needle-moving nature of the company's merchandising initiatives and that the firm believes the stock's current levels represent undervalued growth. They see Academy Sports' greater emphasis on value versus peers as resonating with middle-class households. Academy Sports has 14 current ratings. All of those have come within the last 30 days, and all of them are a buy. With that strong buy rating, the average price target is about $90 per share for an optimistic upside of 57%. Looking at the ratings down below, we have a very high end here from Bank of America with over 300% upside, many of them coming around 30 to 40% upside, and our low end price target still has an upside of 25%. If you've made it to our third stock today, make sure you hit that thumbs up button and that you're subscribed to the channel. Third on the list, we're taking a look at Meta Platforms. Trading under the ticker META, they're priced at $510 per share after growing 136% over the past year. The stock has climbed 33% over the last 3 months. Meta Platforms, of course, is a multinational conglomerate of social media companies such as Facebook, Instagram, and WhatsApp. Their platforms bring together more than 3 billion people between Facebook, Messenger, Instagram, and WhatsApp. But of course, the company is also expanding into the AI world with their Meta AI, their smart glasses, and other virtual reality devices. Their Q1 earnings report will be coming out next week on April 24th, and analysts are anticipating some big year-over-year growth. This follows their Q4, where they did come out with an earnings beat, plus the company initiated their very first dividend. For their Q1, analysts are anticipating earnings per share of $4.31, which is nearly double the same quarter last year. Looking at their Q4, they reported earnings per share of $5.33, easily beating the expectations of $4.82. Revenue came in at $40.11 billion for the quarter and $134.9 billion for the year, which was an increase of 25% and 16% respectively. They also initiated a quarterly dividend of 50 cents per share. Now, the Meta Platform stock has no shortage of analyst attention, with 43 current ratings. And in the last 30 days, we've had 18 analysts weigh in with a buy. One of those includes a 5-star analyst from UBS, who was ranked in the top 2% of Wall Street. They gave their buy rating with a street high price target. They said that while investor expectations are high, they think that Q1 digital ad market got off to a slower than anticipated start with growth levels below the full year 2024 estimates, and the growth is being driven by Advantage Plus and Reels, although reflecting a year-over-year growth level slightly softer than expected. From those 43 analyst ratings, the Meta stock does come in as a strong buy with 40 buy ratings, 2 hold, and 1 sell. The average price target comes in at $547 for an average upside potential of 7.5%. Looking at our more recent ratings, a lot of them are in those mid-teens. Our high-end price targets are $610, and we do have a couple of those for an upside of over 19.5%. To get to our low-end price target, we do have to scroll way back here to January and find this old buy rating here with a downside of 15%. So that is a look at 3 strong buy stocks that have been trending with Wall Street lately and picking up all buy ratings within the last 30 days. If you liked today's video, don't forget to hit that thumbs up button and let me know which of these stocks caught your eye in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you always do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.